Hello, my name is Rob Newman. I am the tax director of Carter Collins and Meyer. Today, I thought I'd do a very short video regarding what's involved when we actually do your accounts. Quite a timely video because I had somebody this week say to me, well, I brought my records in 2 days before the filing deadline. What do you mean you can't possibly get them done? Well, there's a lot involved in doing a set of accounts. It's not a 5-minute process. On top of that, we do schedule our work according to the time someone has brought in their information so that those who are quick and early aren't excessively penalized by those who bring everything late. The stages involved in the set of accounts are numerous, as I say. What's involved? I think there's at least 10 steps. We have to analyze and categorize all of the information you give us into income, expenses, assets, liabilities. Depending on how this arrives, this can be undertaken in a range of different ways. We get a bin bag full of screwed up pieces of paper. It takes us an awful lot longer to separate, sort, and read those than we do if you are keeping nice software records with everything pre-categorized. However, if you are keeping nice software records with everything pre-categorized, please make sure you actually do know what you're doing with it. It's actually easier for us to take a bag full of receipts and turn them into something than it is to sort out very badly posted software. That's actually every accountant's individual worst nightmare, is ticking through software where you think you have posted things correctly but haven't. We would be delighted to help you learn how to use software and to categorize broadly between certain things. But if in doubt, please do contact us at inquiries@uk-ccm.com. One of the most important things we have to do is then reconcile your bank transactions. The bank is probably the best record that you are going to have of what has actually gone on throughout the year, and certainly the thing that HMRC will look at. If you have more than one bank account, we need all of those bank accounts. We need to tick off every transaction that is on there and compare that against the receipts and records and invoices and everything else that we have been presented by you to ensure that they correlate and correspond. If they don't, we have to make changes and adjustments to those working papers, those records, those books, those whatever it is you're working from. We have to then give, once we've done all of that, we've got a very basic income and expenditure. We then have to give consideration to any additional expenses that can be claimed according to HMRC under statute, things like use of home's office, which even pre the pandemic, we always claimed for clients where it was appropriate. If you've paid for mobile phones privately, fixed profit mileage scheme for cars, laundry, and all those other things that are more grey in terms of capturing them or making them part of the account. We then have to look at your assets and calculate depreciation. Depreciation is the estimate of the wear and tear that has been incurred on those assets over the course of their life. It's an accounting adjustment. It's not a tax adjustment, but it is one of those critical ones. I would say in similar vein, we have to look at what's called accruals and prepayments. Accruals are things that you have committed to pay for in the future. Prepayments are those things that you have already paid for that you're not going to get for the future. Again, these are part of forming a set of accounts. They're one of the fundamentals of looking at accounts and preparing them in a proper way. That all takes some time and consideration for it. In a similar vein, although not on the slide, is probably the valuation of stock. If you have stock or work in progress, this is probably the single most difficult area within a set of accounts to actually assess its value of. We definitely have to give thought to how that is presented and what it actually looks like and the effect it has on your results. Having got to that stage, we've now got what is probably a proper set of accounts, but we then need to give consideration as to how that fits in with all your other business activities, income streams, or anything else that you do. Is it tax efficient to award you a bonus, to award you dividends? Should we consider whether you should be a sole trader, limited company, partnership, LLP, or all the other multitude of things that need to be thought of? This is the stage where we would also start looking at things like overdrawn directors' loan accounts. A limited company is not you, identity. If you take money out of that company, if it is not through salary, if it is not through dividends, it is a loan from the company to you. Loans from companies must be repaid. Otherwise, they are taxed separately under what's called Section 455. That is a fairly punitive tax at 32.5%. So we would look at that at this point. We would also give consideration at this stage as to whether other family members should be involved in the business, if there is tax savings to be made by ensuring that the family is undertaking some administration charges, or whether they should have any form of shareholding within the business. Only at that point, and we have probably spoken to you a couple of occasions by there, can we finalize the profit and loss and the balance sheet, which are the fundamental statements of all accounts and what will be considered by both Companies House and HMRC. We can then prepare dividend vouchers and appropriate board meetings for those dividend vouchers. We can then look to process final bonuses through PAYE, through the tax team. And only at that point are we then able to calculate the corporation tax, the capital allowances, and prepare the paperwork as appropriate for submission to HMRC. Once we've done all of that, we will write a covering letter. We will then send it to you via our portal and invite you to talk to us if any changes are needed. Throughout this process, as you can see, there's quite a lot of estimates that need to be undertaken. Try always to seek the best and appropriate accounting treatment and tax treatment for your individual circumstances. But we don't know everything. Stuff will have happened that we don't know what it is. And at that point, we probably have a long list of questions for you, which we will need your input on. If we don't, yes, you can press the big green button and say all approved, but the chances are there will be changes to be made. They will link us or loop us back round to about number 3 on this list, which means we then have to repeat the process all over again. Even for a relatively small set of accounts, this does take time. Even if you are not VAT registered, I think a limited company set of accounts, you're probably looking at about 3 to 4 days to actually do those 10 steps. If you are VAT registered, that's probably going to take even more time because there's even more transactions and things involved in it. This is why we look at your turnover value when we are quoting jobs. This is why we look at the number of transactions that go through your accounts available, because it gives us a very good and clear indication as to the amount of work that's going to be necessary to undertake all of these. In also doing this, we probably also do this, which is stuff around your accounts. There's another 7 steps of these here. We highlight pension tax saving opportunities. Pensions are the singular, most vanilla yet tax saving opportunity that small businesses have. You can still pay £40,000 per year into a pension scheme from a business, from an individual's income, saving tax at the marginal rate that you are subject to, and build up significant wealth outside of businesses that actually is free from inheritance tax as well. These are not often considered by small businesses, but it is massively opportune. At the same time, we will highlight protection saving opportunities or protection creating opportunities. Relevant life insurance is something that you should definitely have if you have dependents. If you are a parent of children who are still in need of support, if you have a spouse, partner who you would want to make provision for, relevant life insurance allows you to obtain protection in a supremely tax efficient way, again saving tax at your marginal rate depending on what that actually is in your business structure. We also give general advice about running a business and making the running of that business easier. We are always happy, I am particularly, Andy, Mo, Mandy, all of us are always happy to have those sort of discussions. We don't tend to do this as a separate service line. We don't tend to have specific reports and things that we do. It is something that is quite soft within the process of producing your accounts, which means we rarely actually are charging for it. But it falls under things like these type of videos that I put out, the twice monthly emails that I put out, the conversations we will have with you. It's amazing. I had a 35-minute conversation just yesterday with a client who came into the office, who walked out and said that they had more value from that 35 minutes than they had received in years from their previous accountants. And do you know what? We hardly talked about accounts and tax. It was all to do with ensuring the running of their business. Where it's appropriate, we will always recommend other professional services and suppliers. We have links into lots of different places for lots of different things, law being one of the most obvious ones. We know lots of law firms and lawyers. We're also very familiar with computer systems, IT, infrastructure, because of our own business. We know suppliers for lots and lots of stuff for our own business, and we will happily share those with you. We will recommend clients that we have worked with and know are of a sufficient service standard that they won't make us embarrassed at any point. And if you would like to explore those sort of options or opportunities, please do email me at inquiries@uk-ccm.com. And increasingly you will hear about this. We will consider it and inform you of changes that are coming to business because of making tax digital. This is a fundamental change to the tax system, which is coming in 2023. The classic line that I keep saying about this is, if you are a sole trader with a buy-to-let property and a VAT sole trade. So for example, you're a self-employed builder and you're VAT registered. You currently do 5 things a year as a minimum, 4 VAT returns, 1 tax return. From April 2023, you will have to do 15 things, 15 as a minimum. This is a massive change. It is going to mean that people are going to have to keep records in a different way. We are also going to have to do a lot more work with you. And yes, I'm afraid that is going to mean more fees when the time comes. We will always seek to highlight rules and changes from HMRC and not only ensure that you're compliant with them, but see what opportunities exist for your tax planning. As the rules have been announced in May 2021, by April 2023, corporation tax is going to go up. Marginal rate tax will exist. Most people's tax rates who will watch this video will be around the 26.5% if they're in a limited company, plus a further 7.5% or 32.5% on dividends drawn from the company. For many clients, it will be time to consider leaving being a limited company when that happens. Yes, for the last 20 years, all accountants have gone, become limited, become limited, become limited. From 2023 onwards, and possibly even now, to a large degree of argument, there is a significant reason why you probably won't want to be limited. But again, I will, and we will always highlight these to you. Please do engage with the tools and resources that we put out. And yes, we will send reminders of all of this on our monthly newsletters, my monthly webinars in person, and everything else we see. I would remind you that you can go to our website at any time, uk-ccm.com. There is a wealth of material I have written over the years on there. There is loads and loads and loads of stuff that you can read. There is also pages to book up for webinars. Webinars can be watched from mobile phones very easily once a month, or replayed at our YouTube channel. For those of you that don't like reading, you can listen to my dulcet tones waffle on to you. I would urge people to do this. I do all of this for free. I spend loads of time at it, and there is loads of learning to be had. So that is what's involved in doing a set of accounts. It's not a 2-minute process. There's loads of learning. Any of you that ever come into my office will see a big pile of yellow books in our boardroom. The Tolley's Tax Guides to Direct Taxation. They are printed on tissue paper. It's, I would think, about 3 foot thick, these books, and that is the tax law. That stuff has to sit inside my head at all times so that at least I am aware of what's there to facilitate your planning. Please do understand there's lots of craftsmanship involved in doing a set of accounts. Thank you so much for watching. I will see you again very soon.